How do you do, ladies and gentlemen? Good morning. I'm your host, Seth Julian. Welcome you to today's morning coffee briefing. We're looking at the S&P 500 index, and I'm focusing particularly in the last 2 days. We've seen a turnaround in price, and my reading of the papers this morning, particularly an article in the London Economist, says that stocks may be on the bounce back. Personally, and I'm not one to take umbrage with the lofty economist, but I think they're wrong, and I'll tell you why. First of all, the long-term trend from the beginning of the year till now is, even in the mighty S&P, it's something like 18%, even to today's price. 13%. It was 18% before the last rise. So even at 12%, it's still a significant downturn. A couple of other factors. It had broken above the 20-day moving average, and it's sort of fighting now with the 50-day moving average. And keep in mind that moving at the average of price is value. So when we say, and there's an old quote that says, a cynic, this is a quote from Oscar Wilde and Lady Windermere's Fan. He says that a cynic is somebody who knows the price of everything and the value of nothing. Price is just a data point. Value is an average of price over time, and it's much more informative than mere price. So, yes, it is propped above the 20-day value. It's approaching the 50-day value, and it's quite distant from the 200-day moving average. Now, the other thing I want to point out to, these last rises are on below average volume, and that means that there's less sentiment behind these moves. That means that there's less momentum behind them, as we say. And just for the sake of thoroughness, let's take a look at our the Asian equivalent for the S&P 500, the Nikkei 225. It's taking a little pop up there too, but notice it's just kissing the 200-day moving average as well. It's below it. It tried, but it's retreated in today's trade. Also, this rise is on below average volume. That to me is a telling stat. Finally, let's just take a look at the world indices writ large. They've all taken this little pop lately, but we don't except for the Spanish, except for the Madrid, the indices are all down, including the mighty Tadawul. This is not an index of stock. This is an index of the U.S. dollar, which is also pulling back a little bit. So the point I make here is that it's a temporary fluctuation. It's an adjustment in the longer term secular trend, which is definitely down. Nothing's changing. Inflation is picking up. The European war is getting worse. Inflation is going to get worse, and so is energy price is going to go up. So on that bleak note, ladies and gentlemen, let me just say that I'm your host, Seth Julian, and I wish you all the ability to trade with confidence, ladies and gentlemen. Bye-bye for now.